What's up, guys? Welcome back to the channel. This is an interview I got to do with Andy Schectman of Miles Franklin. Andy is just a wealth of information in this precious metal space, free market economics, finance. I mean, all of that. He's legendary. I also just recently got approved to be a precious metals broker under Andy at Miles Franklin. So if that's something that you're looking to do, if you're looking to add precious metals to your portfolio and you're looking to do so at $1,500 or greater for an order, I can certainly help you with that. I'd love to be able to quote you with that. If you're starting out and you're not doing that size of an order, you can purchase right through a local coin dealer. I have a link for SD Bullion. They're fabulous, especially on the smaller stuff like the dimes and quarters and things like that. Or JM. A lot of people use JM. I will say if you're buying in larger quantities, Miles Franklin is probably guaranteed to beat those prices. So anyway, with no further ado, this is Andy at Miles Franklin.
When you realize that it's currently priced at 76 to 1, yet it's coming out of the ground at 7 to 1.
Yeah.
You have, in essence, 11 times undervalued silver in terms of its relationship to gold. But further than that, the applications industrially that silver have are expansive and they're new. And so the industry or the world really hasn't quite factored that in, I don't think, when you have these green and digital applications that are expanding in silver, that make this argument even more, I think, head scratcher when you think, how is it that there are all of these applications industrially? Over the last 2 years, you mentioned a deficit in supply. Yeah, I mean, last 2 years, we've been between 3 and 500 million ounces short between demand and supply. Last year, there was about 800 million ounces mined and over 1 billion ounces demanded, 1.1. And that's just from the industrial standpoint. We're experiencing a global renaissance in monetary demand. The silver squeeze, the Wall Street silver guys, all of the people that are talking about silver are adding to that. And when you think about an asset or a commodity, typically the demand comes from one side. Copper is almost entirely a industrial commodity and is used in industrial applications, whereas gold is almost entirely a monetary asset, which is primarily used in monetary investments and applications, not so much in industrial. But what you see with silver is unique in that it is bracketed on both sides between a monetary demand that is expanding globally and an industrial demand that's going through the roof. You know, our media does such a poor job, Travis, of talking to us about reality. To me, one of the things that they ought to talk about is the Chinese Belt Road and Rail Initiative. This is the largest infrastructure project in human history ever attempted. And it's connecting Asia and Africa, 75% of global population, 45% of global GDP before industrialization. But what people aren't factoring in relation to silver is that you have to connect 75% of human population digitally. And so the need for silver in a digital world is ridiculous, let alone the infrastructure that is being used that will require copious amounts of silver. Just about anything that conducts electricity from your iPhone to the largest motherboard known has little bits of silver in it. So when you talk about expansive infrastructure projects, when you talk about the asset, yeah, and the asset that is depleted in nature, it just really says a lot about silver. And you know, quite frankly, I think that from a standpoint of value, there are very few things on the planet that offer that type of value. But even more accentuating this point is, of the miners, of what's pulled out of the ground, of the 800 million ounces that were mined last year, only 30% of it, or call it 240 million of the 800 million ounces, came from guys like Keith Neumeyer, came from primary silver miners. There's only a handful of primary silver miners out there. And that's because silver is found very close to the surface in a form called epithermal. And if you've ever been to a silver mine, you can kick a rock and you'll see, very likely you'll see some silver on the ground. It's found right at the top. So the big deposits were found decades ago. And so when you factor that into the equation, that would then conversely mean that 70% of all the silver that comes to industry, 560 million, are found as a byproduct of mining other materials.
Like copper or
right,
nickel
copper, lead, whatever. And so when you talk about only 30% coming from primary deposits, but the majority of it, oh, look, we're mining for copper. Look, we found some silver. Right. All of these things factored into the equation, much more increased demand in industry, in a monetary demand, a depleted asset that, that only 30% comes from specific companies mining for silver. And it valued at half of its 1980 high. Yes. I mean, I don't know if you could ask for a better investment from
that's what's interesting, because my audience is primarily exterior contractors, like bobcat operators, construction guys, home builders, things like that. And silver is a natural, they gravitate towards it more so than crypto or any other asset. Like what I get back in the comments or what I get in emails is like, hey, Trav, I know you're into this crypto stuff, but like to me, it doesn't really feel real, but I bought my first silver coin. And it just is, there's something spiritual about it where people just make a mental shift. Once they buy their first coin, I encourage everybody, go out and get your first coin from a local dealer, pawn shop, and wherever you can find it. You'll pay a higher premium, but you'll have this one coin. And it does change your mindset about how you think about fiat dollars. When we have a 7-year-old daughter, and when we go there every time, she's like, Dad, we just gave them fake money. Yeah, she thinks it's like a robbery every time we leave. Every time we do that.
Well, it becomes even more fake when you realize that 50% of every one of those dollars that you've ever seen, 50% of every dollar that's ever been created in the history of the United States was done so in the last 20 months. So it is fake. It is fake. It's fiat. It's currency, not money. That's
super incredible. Yeah. So moving into my next question here, talking about confiscation. Back in the 30s, for those that study this in history, back in the 30s, I believe it was Roosevelt.
It was.
Confiscated all of the gold. He did not confiscate the silver or copper, but back then we actually had, everyone had silver dimes, copper, pennies, gold pieces, $20 gold piece, and he confiscated the gold as a way of basically the U.S. went broke. They repriced the gold price. They made it illegal for U.S. citizens to own until it lasted through the 70s. Up until the 70s, to own gold, because it's primarily a store of monetary value. And it is kind of shocking to think your own government can confiscate property like that, but they did. And they didn't fully confiscate. They did it in a nice way. They gave everyone a $20 bill. And they're like, oh, here you go. It's as good as gold. It's backed by gold, which at that time it was until 71. Do you see a risk for silver ever being confiscated in the future?
So first of all, to your question, right there.
Yes.
President Roosevelt. Here's his executive order that was used to confiscate this, which was a $10 gold piece, which was the exact same thing as this $10 gold certificate. And if you read the bottom of the $10 gold certificate, it's interesting. It says payable to the bearer on demand in gold coin instead of in God we trust. It's the way it used to be, where you could walk into the bank and trade a $10 gold coin for a $10 bill, because walking around with a pocket full of coins wasn't as easy as having a bill.
Of course.
That was his first act in office in April of 1933. Now, they did half-heartedly try to confiscate silver the following year in 34. No one turned any in.
Interesting.
It was a half-hearted attempt, to say the least.
Okay.
I think that confiscating gold would be a very difficult thing this time around, or any physical commodity. I think when you look around the world and see countries like communist China not only allowing gold ownership, but promoting it to their citizenry on television commercials, on the back of buses. You walk into a mall in China and 70% of the stores are selling precious metals. The recent estimates by Alistair MacLeod, one of my favorite economists in this industry, is that the Chinese own 38,000 tons of gold, of which 18,000 of those 38,000 is owned by the people. That 38,000 tons, in essence, would be 5 times what the U.S. supposedly owns in Fort Knox. I think confiscation would be something in this country, it would be checkmate for the US, and we'd have bigger problems to worry about. What I think they will do instead is confiscate the ETFs. If you look at GLD and SLV as an example, let's talk about SLV. SLV is the second largest stockpile of silver in the world. Who owns the largest stockpile? Well, that would be the fox guarding the hen house. That's JP Morgan. JP Morgan, who paid a $920 million fine to the Justice Department last year for manipulating the silver and gold market, owns, by Ted Butler's estimations, over 1 billion ounces of physical silver. They have used the manipulated price in order to acquire what is in essence the largest stockpile in the world. And as a sign of the times, as bogus as it is, you're talking one of the largest banks in the world who has done nothing but pay repetitively fine after fine after fine after fine for years in a row for manipulating things like LIBOR, manipulating the Forex market, and or the precious metals market, is still allowed to run the world's largest silver trust, SLV.
Yeah, it's
talk about the fox guarding the hen house. So what I would suggest would happen is that we wake up on a Monday morning and find GLD and SLV confiscated. GLD is one of the third or fourth largest stockpiles of gold in the world. It's run by HSBC Bank. So we wake up on a Monday morning and the government says, those funds are now closed, and you have whatever value you had in that account is now in your money market account. And the government looks at the world and says, what? We didn't do anything. We didn't activate eminent domain like Roosevelt did. We didn't break any laws or infringe any civil liberties. In fact, you can still go buy a metal from any dealer like Miles Franklin. Go for it. In other words, they'd be sitting on the second largest stockpile of silver in the world and the fourth largest stockpile of gold in the world without going door to door and ringing the doorbell of people who are NRA, freedom loving people who own physical gold and silver for whatever reason. But I think
it would be more popular to take it digitally. It makes sense. I mean,
yeah, it would give them the ability to have their cake and eat it too without really ruffling feathers. But I think if we were to activate eminent domain and take from our people the way Venezuela did, no one would ever trust us again globally. And I think you'd see a dumping of all sorts of assets like treasuries and anything in this country. If our creditors feared that type of nationalization of assets, the likelihood of us ever being the world reserve currency or the center of free trade goes out the window. So I'd like to hope it doesn't happen.
It would not be a good thing. So I had a question from a viewer, which was the best way to buy metals with no paper trail because they were worried about Fed compensation or subpoenas in the future to outlaw metal ownership. To which you're saying not really that big of a deal as long as you hold the physical.
Well, I mean, when you buy physical precious metals, the only paper trail is writing out a check or sending a wire or whatnot. I mean, I guess you could pay with crypto. Also, we do take it. Then you've never written out a check. There's an invoice. But that's it. That's where the paper trail ends. In a world of decreasing privacy, it's one of the most private investments, for sure. And because once you own it, it's gone. You know, I send it to you. What did you do with these 2 coins? I don't remember where I put them.
They went, of course.
So I mean, but in a world where everything is tracked, everything requires reporting, whatnot, I would say to you that the likelihood of the privacy noose tightening around us, I think, grows every day. You can see the Democrats wanted to enact a bill that $600, anything in or out, gross inflow or outflow greater than $600 would be tracked. That's not the case right now. It got, Shauna, someone's at the door. Sorry about that. It got tracked so that, you know, anything above $600 is no longer tracked. At least it got voted down. It'll be 10,000. But you can see they're moving to a place where they want to eliminate privacy. So having precious metals in a world of decreasing privacy is something that I think, you know, certainly is an added bonus, an added benefit, 100%.
Likewise with unrealized taxable gains.
Right, exactly.
So the conversation at the moment for our viewers is that perhaps Janet Yellen, I just heard it recently, Yellen and the felon. It was referring to the Fed chair and Yellen in Congress the other day. So Yellen and the felon were up there promoting the idea of taxing unrealized capital gains. So this would be to say you're holding a stock and you've held it for many years, you haven't sold it. Typically, you pay your capital gains when you sell it. They would just tax it annually based on your value. So this guy owns.
Yeah, it's like a mutual fund that taxes unrealized gains, and that's look, the government is starved for revenue. We're broke. We're insolvent, and so they're going to try to find as many resources to find revenue as is possible. And those are the kind of things we're going to have to deal with moving forward for sure.
Just furthers the case for silver. I mean, you've got like a monetary case for silver, you've got a use case, like an industrial use case for silver, and you've got a privacy and social cultural use for silver. There's really no other asset out there. I mean, you could say crypto, but there's clearly a trail when you go and purchase crypto on an exchange. I mean, of course, you can hold it and you can transfer it immediately, but it's still, I don't know, it has a different use case than an actual, piece of silver that you have in your possession.
Well, look, silver and gold are immutable wealth. They have been for over 5,000 years. And when you talk about, the history of gold and silver, they've outlasted every pandemic, two world wars, German hyperinflation, the Great Depression, et cetera, and still are, immutable form of wealth. There is nothing like it from that respect. I'm not saying it's better or worse than anything. I'm just simply saying that in terms of time-tested historical wealth that offers you privacy outside the financial matrix, this does. And there are very few other things that have that kind of track record.
With the historical preference, I did some research the last few days, and I've come at I've gotten a number that kind of concerns me in a way, but I've tried to figure out historically what a day's labor is in silver terms. And the number that I've arrived at originally was 1 ounce a day, which I thought, well, that's pretty low. But if you think about, in historical terms, when you're on a silver or gold standard, like, yeah, maybe that's correct, because we don't know what the true price of silver is. It's one of the only assets that the price is derived from the derivative. So we don't actually have a physical spot price for the asset. I mean, I guess we do, but not really. I mean, it's more the premium above, but it's derived from the derivative. Historically, what would you say to the value of silver being in a world previous to central banks where there was manipulation and it was just used for currency for thousands of years, almost without incident?
Yeah, well, and not only is the price derived from the derivative, which is the tail wagging the dog, it's also the most concentrated short position on the COMEX market by far.
Yeah.
The largest, most concentrated shorted product on the COMEX market, not even close. There's no other commodity even close.
Why is that? I mean, because my generation, the millennials, are like, there's corruption everywhere. Maybe it's always existed, but we see it now. I mean, everything is just a psyop of some sort. But if you look at silver and you're like, what is really going on with it? Because I mean, you can buy it. I mean, like as I have for years, and you're like, well, the price doesn't move, which I like because I'm accumulating. So I'm fine with the price going down. That's fine with me. But it is one of those weird things where it doesn't move and people lose their excitement for it because it's not, rocketing to the moon. Why the shorting? Why, like, is there something underlying, like under the surface, that's really like a major conspiracy there? Or is it just in the best interest of their clients because they, Tesla needs it to make cars?
Well, I think originally, yes, I think the industrial applications are probably part of the reason anyway. I mean,
yeah,
intuitively, it doesn't make a whole lot of sense that they would manipulate silver and gold to the degree that they have. And for a very long time, I would get up on stage in conferences and talk about this. And there were a lot of people who wouldn't believe it to be true. Why would anyone short the market until JP Morgan admits to it and pays a $920 million fine? Look, silver is used in anything that conducts electricity. There's 500 ounces in the tip of every Tomahawk cruise missile. It's needed for any industrial application. It's also a monetary asset. So I guess maybe it's in the best interest of the central planners who need it for any industrialized activity, from military to infrastructure to hold it down. I'm not exactly sure what the incentive is. Maybe it's the inverse relationship between fiat, US dollar, and the canary in the mine shaft, gold and silver, in the respect that there's a term in economics. I guess maybe if I had to narrow it down to one thing, it's something called Gibson's paradox. And Gibson's paradox is directly related more so to gold than it is to silver. But Gibson's paradox is an economic term that speaks to the inverse relationship between real interest rates and gold in particular. But gold and silver have a 90% correlation since the beginning of time. In other words, what Gibson's paradox says is that if you have really low interest rates, then you should have gold and silver flying, because there's no opportunity cost in buying something that pays nothing in terms of a coupon or a return in interest. If you have super high interest rates, then you would buy treasuries with safety and compound your investment. So I think the real manipulation in this country is, while there are other things on the periphery like gold and silver that are manipulated, the real manipulation center is around interest rates. And if you hold interest rates low, it creates a perception, an illusion really, of wealth, where people's 401ks are flying and their real estate is flying. The real estate flies because people can buy more property, a larger home for less money. Your 401k flies because you can't invest. The law of 70 seconds, rule of 70 seconds, where you take the interest rate that you're paying or are charging and divide it into 72, and it tells you how long before your principal doubles. So, with interest rates so low, you can't go into fixed income. So you're forced into speculating into an equity market that just simply continues to defy gravity, based upon the fact that you can't live any longer on a fixed income arrangement. So those low interest rates, which create this illusion of prosperity, Gibson's paradox says gold and silver should go to the moon. But if you want to maintain strength of currency, or the illusion while you are keeping interest rates low to stimulate artificially these markets, then you step on gold and silver. I think that's the real reason that they do it. And it's gotten to the point where, the unintended consequences of doing that have awoken a whole generation of people that say, oh my God, look at what a value gold and silver is. And now they just have to keep stepping on it, because otherwise it's spring shots. And when you talk about the 4 or 5 massive commercial banks that hold these huge short positions that have been bleeding for the last year or so, if the price were to go up, this is what put Bear Stearns out of business. Bear Stearns went out of business because they held the largest short position ever in the history of the COMEX on silver. And when silver went to $21, it put them out of business. If you read Chris Marcus's book, The Big Silver Short, it talks about this in there, where basically, Jamie Dimon was called into the office with Paulson, and they basically said, you need to take over this position. And because, we need you to do this. And they agreed to do it. The interesting part about it is that they were told that they had to, Jamie Dimon says, look, we'll take this position, but when it's factored against our own short position, we will be well above position limits. And this, by the way, all comes from admission by the former CFTC commissioner, who passed away a week after. What the heck was his name? It'll come to me in a minute. Anyways, it's in the Big Silver Short, where
I'll link that in the link for the guys.
And they agreed to pare down the position. They were given a time frame, and when after the time frame had expired, the 90 days or what have you, where JP Morgan was supposed to pare down their time frame, the CFTC commissioner went into his superiors and he said, this is all admitted. Now, he admitted all this on Chris Marcus's podcast, on Arcadia Economics. He goes to his superiors and says, JP Morgan needs to be prosecuted. In fact, they have not decreased their short position. They've in fact added to it. And he was told by his superiors, back down, this is a political decision. Now, the guy that made this admission. I can't believe I can't think of his name. He died a week later after admitting this on Chris Marcus's show. And it's the only time he ever admitted it.
Okay.
Bart Chilton, thank you. Bart Chilton was his name.
I'll try to link to that.
Yep.
Arcadia Economics was what it was.
Arcadia, yeah, you just want to Google Arcadia Economics Bart Chilton.
That's a good channel too for you guys.
As far as I'm concerned, it is the most groundbreaking interview I've ever seen in this industry, because you have the former head of the commodity police, the CFTC, who comes out and says, I wanted JP Morgan prosecuted. They agreed to pare down the short position that they inherited from Bear Stearns, but in fact didn't pare it down, they increased it. And when I went to my superiors, they told me to back down. It was a political decision. He died a week later. Now, is it coincidence? I don't know.
Yeah.
Or is that what happens when you speak out against the largest commercial bank in the world, who is incestuously tied to the US government? But what it was the first time I have ever seen an admission, short of the JP Morgan admission to the Justice Department, from the head of the CFTC, who said, yeah, they're manipulating the market. They did. They should have been prosecuted. If it were up to me, they would have. He had never, ever said that in public, or no one of his level has ever said anything remotely close to that. And so when you're branded a conspiracy theorist, and that you have the head of the CFTC acknowledge it, when you have the Justice Department acknowledge it, when you have the metals desk of JP Morgan acknowledge it, you have to understand that it's real. But the question isn't why, or is it manipulated, is why is it manipulated? And that's when you start to go down the rabbit hole. Is it related to Gibson's paradox, or is it something bigger? Now, if you even take it a step further, JP Morgan, the gal that used to run their metals desk, her name was Blythe Masters. And if you Google Blythe Masters, JP Morgan admits that metal is not theirs, you have to wonder, whose is it? Who holds 35 million ounces of gold and over 1 billion ounces of silver? That's by estimate what they're holding. That's by far the largest position of precious metals combined the world has ever seen. And they say it's not theirs. Is it the Chinese? That's what I believe. I believe the Chinese brokered a deal with JP Morgan and said, we will, and the US government, we will not dump our treasuries. You're going to allow us to do what you've been doing for years, and that is suppressing the futures prices. Originally, the West suppressed the price of gold and silver because of Gibson's paradox, because if you're going to maintain a low interest rate policy, you can't let gold and silver fly.
Right. Yeah.
And so the plan, in essence, was the central banks would lease the gold to the commercial banks, who would then short it on the market, which would drive down the price. They would take the proceeds. Now, they were leasing it at less than 0.5%. They would take the proceeds of the short sales and plow it into treasuries. They would get to keep the spread between what they leased it for and the return on the treasuries. They were making gazillions of dollars with impunity, because they were told from the high up, this is what you need to do for us. They were given immunity. It created an environment where gold and silver never took off. The commercial banks made tons of money, and the central banks were happy because no one questioned the value of Western central bank currencies. Well, that all changed along the way with 9/11 and Afghanistan and Iraq, and the movement went from manipulating of markets to sheltering from what's coming next. And anyways, the bottom line is simply that we are so far deep into this quagmire that there are 4 or 5 commercial banks that, if the price rises, it will bankrupt them. And it will truly bankrupt them, just like
a mess. I mean, if you just think of the 5 major banks being like a Bear Stearns because of that, it would be an absolute economic mess.
Well, and that's one of the reasons why they try so hard to keep the price down.
Yeah.
But in a globalized world, you can only manipulate price by pushing it to the direction it's going.
It's fair to conclude that at some point in time, silver is just going to rip, and when it rips, it's just going to be explosive.
I think that's what you're seeing. You're seeing them trying to position into a place, and the biggest money in the world. Last year off of COMEX, the managed money traders, that they're a new group that are called the Others. And this group, the Others, and so every week, the COMEX produces a report, and it's called the commitment of traders report, and the commitment of traders report shows the positioning of the largest traders on the COMEX market, only the largest traders. And it used to always be the specs, which are the hedge funds, and the commercials like JP and Goldman on the other side. Last year, they all of a sudden out of nowhere, they show us a third group of reportables, and they're called the others. And this group, the others, are sovereign wealth funds, and to a lesser extent, family offices. Last year, they delivered off COMEX over 300 million ounces of silver. That's a decade's worth of deliveries than anything I've ever seen in the 30 years I've been doing this. So the biggest money in the world is drawing off metal off of COMEX. Right now, there's one managed money trader in the others category that is long 40,000 December gold contracts. That's 4 million ounces of gold. That's 7.5 billion worth of gold. That would require an initial margin deposit of about $340 million. And if they do what they've been doing for the last year and a half, they'll take delivery in December. The biggest money in the world is using the manipulated paper price to run cover for massive acquisition. So whether it's a bank like JP Morgan or the sovereign wealth funds or the family offices, they are all draining the COMEX market and the physical market of supply while the paper price is being manipulated to run cover.
So essentially what's setting up is like the short, in my opinion, the short squeeze of the section.
Yeah, you're going to wake up and you'll see it. They'll let it run as much as they did by holding it down.
Right. Do you know what the supply of silver is, the estimated supply? I recently read a book on the history of silver, going way back before World War II, talking about senators that had interests in Nevada for reinstituting silver. Not they, how they used to ratio, 1 to 15, 1 to 12. We can debate back and forth, but the U.S. had that as a standard. And the silver supply was shockingly huge in like 1900 and in World War II when they used it for, I believe, a dam. I think it was Niagara Falls. They actually, utilized it to generate energy, the silver stockpile. But then at the end of the book, it was like there was no supply. I mean, it was in the billions, if I was correct, as far as ounces.
Well, the U.S. Mint has sold, or the U.S. has sold all of its strategic stockpile of silver. They don't have any. I think last I heard there was about 2 billion ounces above ground, of which 1 billion ounces or more is held in strong hands in the terms of 1,000-ounce bars and ETFs or what have you.
There's just not that much.
Right. And JP Morgan supposedly has 1 billion ounces. Look, every single year we mine 800, last few years, about 800 million ounces, but 1 billion ounces is demanded. It's depleted as it was 16 to 1 forever. Keith said it was 8 to 1 last December. Now it's 7 to 1. Yep. It's depleting. Remember, it's found near the top. Yep. So the thing about silver is that anything that conducts electricity has it. And as you said about your phone, you toss it. If it's used in a tiny little amount, it's not recycled. Silver is depleting. It is the above ground supply is tiny in comparison to the amount of money out there. I don't know the exact number. I don't know if anyone really knows the exact number, but it's under 1 billion ounces. I'll put it to you that way. And let me just give you an idea of how small that is. A few weeks ago, our company sold 600,000 ounces of silver in 1 week. And I mean, I never would have thought that's possible, ever. But in 1 week, we sold 600,000 ounces of silver. And if there's 1 billion ounces above ground available that isn't already encumbered, and that might even be a stretch. And if you're running a continual deficit of 200 to 300 million ounces a year between mine supply and demand, if you realize it's found near the top and all the big deposits were found decades ago before the advent of advanced imagery, you tell me. It's an asset that, in fact, the US government has a geological branch of the government, and I forgot the exact name of it, but a few years ago they came out and publicly said that they believe silver would be the first element off the periodic table of elements that would disappear. The first element that would be stricken from the periodic table of elements. That was the US government saying that. So when you have an asset that is so needed in an expansive industrial application, and now people are hoarding it because of its monetary qualities, it's getting harder and harder and harder to get. And I've been saying publicly for the last year and a half that my industry will be ultimately will be defined by the inability to source product. And I still believe that.
Yeah,
Look, you just look around you right now. The UK Mint has said they're out of silver blanks. They can't produce any more Britannias for the time being. The US Mint did that earlier in the year, or last year quite a bit. You're going to see this happening more and more and more and more. It's something we've taken for granted for a long time. And I think as the world wakes up to what's happening to all of the global currencies, you look at silver as an asset, half its price in 1980, and every other asset in the world at all-time highs, most of which are unjustified. I think we'll reach that seminal moment before too long where it becomes unobtainium.
Unobtainium. Yeah. Now, my last two questions for you, last 2 points I've got to get from you, because you're a wealth of knowledge, and I could spend all day talking to you about silver. Like, I love these subjects. That I have to correct myself. I believe my notes were, my research was 1/10 of an ounce of silver was a day's labor in Roman culture back in the day. I was trying to figure out the denarii and trying to figure out the ratios between that and a shekel, and so I could be incorrect there, but that was somewhere between an ounce and 1/10 of an ounce. Doug Casey is cited as saying that he believes 10 years in the future that silver and gold would be re-implemented as currency into world trade. Do you see that as a possibility, or do you think that its days as an actual unit of trade for the masses has passed?
I think, for whatever reason, and I don't know why this is.
Yeah.
For the better part of a year, I was the only person talking about something. And then Andrew Maguire started talking about it too. And I love Andrew Maguire. But something resonated with me unlike anything I've ever seen in my career. And that was starting in 2017. The German Bundesbank said, we want our gold back to the US. And it was weird because no one was buying gold. In fact, it was the worst year to own a precious metals company in my entire 31-year career, as Bitcoin was taking off and the Dow Jones was taking off. But the German Bundesbank says, send us back our gold. We want it. And the US New York Fed has been holding it since 1944 at the end of Bretton Woods, or the end of World War II. Mm-hmm. At Bretton Woods, when the US pegged its currency to gold, and all the other foreign currencies pegged their currencies to the dollar. And it was convertible to gold. Within a few months of that happening, the Dutch National Bank, the Bank of Austria, the Bank of Poland, Hungary, Turkey, many other of the Western central banks all made the same declaration, send us back our gold. And they did the same thing with the Bank of England. The following year, in 2018, those same central banks bought more gold as a group than they did in the previous 60 years combined. So first they say, give us back our gold. Then they go on a massive buying spree. In 2019, the following year, those numbers were up 100%. And then the Bank of International Settlements made what I believe was the biggest development in my career, and no one ever talks about it. And that was gold being reclassified as the world's only other tier 1 reserve. So reserve assets. So think about this for a second. They obviously take care of their own. So they say, look, and we're going to reclassify gold as tier 1. You better start buying it and bring your stuff back. So they call the New York Fed and the Bank of England, say, send us back our shit right now. And then they start going on a massive buying spree. But ask yourself this question. Why would the most powerful bank in the world reclassify gold as tier 1? And if you Google what tier 1 means, it's riskless. It's the same thing as US dollars, which have been the only tier 1 reserve asset in the world since 1944. And a tier 1 reserve would be, I need to borrow $1 million from you, Travis, and you write me a check for $1 million. I'm going to give you a briefcase filled with $1 million in $100 bills. You put it under your mattress and hang on to it until I pay you back. That's zero risk to you. Yep. That's a tier 1 riskless asset. A briefcase full of $1 million bill, or $100 bills, equaling what you just lent to me. Well, the Bank of International Settlements, which is the central bank or central bank, says a briefcase full of gold is the same thing. So at least in terms of central bank policy. So you have the biggest bank in the world that controls all of the other central banks telling you that gold is riskless. Now, why would they choose that over special drawing rights from the International Monetary Fund or euro or yen or whatever it is? They chose gold very quietly. And the banks have gone on a massive buying spree of it ever since, holding down the price on the futures market to scoop it all up while the other markets like cryptos and equities go to the moon and gold languishes, but it's now tier one, so they can scoop it up without anyone noticing. And then bang, we wake up one day and it's all repositioned.
Right.
I would say to you, yes, gold will most certainly, I don't know about silver because that's not tier one, even though there's a 90% correlation between the two throughout all of history. I do believe gold will be tethered to a new world reserve system. If not, no one will ever drink the Kool-Aid again. And I don't think it'll be convertible like it was in Roosevelt's day, where you could go in with a $20 gold coin and get a $20 bill and vice versa. But I think they will peg a portion of that new currency to gold with the, and it'll be digital. It'll be a digital currency with the veracity of the gold held, the immutability and the veracity of it held maybe in a Swiss vault that's audited by the big three accounting firms, but the gold underpinning the new currency will be denoted on a distributed ledger. So you can see, here's the gold, it's backing, and maybe it's only 10% backing, but that 10% backing is enough to hold on to it so it doesn't take off, you know, to the moon, like we're seeing in a country that just continues to print its way to prosperity.
And for guys like me that are relatively new to the metals market, it's not whether or not there's enough silver and gold to go around, it's a matter of price.
Right. That's exactly right. It's a matter of price. And that's why you get guys like Jim Rickards saying gold will go to 10,000 and will never come back, because it will be used to peg a new system.
Yeah.
And if you have
I think Jim is saying 15 at the moment as
well.
Well, yeah.
For
what is, you know, the gold supply to what the currency units that have been created to keep everything like nothing ever happened would be like 15.
Yeah, and when you talk about the possibility of that happening, look, a trillion seconds ago was 31,688 years ago. And when we talk about a government that is arguing about $3.5 trillion infrastructure bill, and yet they can't even pay the mortgage or the electricity bill, when you talk about a government that it believes that for illegal immigrants, for children who are separated, that they deserve $450,000 for every one of them.
Yeah.
When you talk about modern monetary theory, where a government can just print its way into prosperity, the reality of these highfalutin prices in gold and silver, to me, become more realistic by the day, as what we are doing is we're destroying the dollar. Absolutely. And you know, when 50% of every dollar ever created in the history of this country was done in the last 20 months, we are destroying the dollar. And so when you talk about gold reaching these levels, look, the one thing that I've learned, Travis, in 31 years in this industry is that bull markets go higher than anyone ever think possible, and bear markets fall further than anyone thinks possible. Case in point, I started in this industry in 1990. At that time, the Japanese Nikkei was just about 40,000, and they owned Rockefeller Center, Pebble Beach Golf Course. They owned casinos in Vegas and ski resorts in Colorado. They made anything with the motherboard better than anyone in the world. They made anything with a combustion engine better than anyone in the world. They were taking over the world. Now, I'm going to look real quick and see what their Nikkei is today, but it was nearly 40,000 30 years ago. And today, the Nikkei is at 29,000. It's never come back, ever. In 30 years, it has never come back, and their interest rates have been at or near zero the entire time. You could not even convince that populace who got so burned in the crash of the Nikkei to come back 30 years later. And at the same time, you look at the Dow Jones, which when I started was 2,100. And the very first conference that I went to in 1990, there was one guy who said that the Dow Jones will go to 10,000, and he was literally laughed and booed off the stage.
Yeah.
So I guess when you look at a market and a country that was taking over the world lose so much of the value of their Nikkei and still not come back 30 years later, or the US, where the Dow Jones, by no one's estimation, would have grown 15-fold, but did. Bull markets go higher than anyone thinks possible, and bear markets fall further than anyone thinks possible. And when you see the biggest money in the world, whether it be the central banks, the commercial banks, the sovereign wealth funds, and the family offices, in a very clandestine manner, literally cornering the physical supply of gold and silver, I think prices will go higher than anyone thinks possible. And when you put that in the framework of gold underpinning a new world reserve currency, that's why Jim Rickards says what he does. That's why Jim Sinclair has been saying it forever, that it'll go to these levels and never come back down.
Do you think that they could ratio? Like, I mean, do you think that they could ratio close to the mining ratio? If
Well,
gold goes ridiculous. And,
it makes sense because if it's coming out of the ground at 7-1,
yeah.
I mean, at what point can you pretend that it's worth 70-1? You can't.
Yeah, right. So, there's a point where the game's over.
There's a point where the natural laws of supply and demand take over, where the miners are going to say, "Screw it, I'm not mining anymore." I was on a call with Keith Neumeyer last weekend, and he basically is saying, you know, he wants to spearhead a coalition of other miners to wake up and say, "Enough already! Stop playing this game. Stop feeding metal into the system, withhold the supply."
Yeah.
So that the laws of supply and demand, the real laws of supply and demand, take hold. Instead of the paper market creating the price, it should be the paper market is used to hedge risk, not to set the price.
Yeah.
And that's really the bottom line here, is that it's the tail wagging the dog, and that will change at some point. But that is why I think the central banks reclassify gold as tier 1, because they realize the inevitability of this.
Your father told you something when you got in the business. I want you to tell these guys this, because I think it's important, because for me, it built a habit of saving, and it totally changed my financial situation a couple of years ago when I was just like, you know what? Every work I do, every dollar I get, part of this is going into my silver stack, gold stack, you know, mainly silver, because it's just so asymmetrical. And then you had mentioned something in Dallas about the Canadian vault. Recently, I just finished Nomad Capitalist, Andrew Henderson's book, and I learned through that there are 2 assets as a U.S. citizen that you can own that are non-IRS tax reportable, and that is physical metal held in a vault outside of the United States and land. And I thought, that's an interesting loophole. And so what your father said, and then the Canadian vault option that Miles Franklin has, and I'll wrap it with you.
Sure. So I was 19 when I started working at Miles Franklin. My dad and I started the company. He started it about 3 months before I came on board. And he said to me, "There'll be one rule and only one rule, or I'll fire you." I'm like, "Okay, I can deal with that. What is that?" He says, "You'll buy something every 2 weeks." I said, "That's the only rule." Cool. I have done so. I've honored that promise. He won't fire me any longer, even though, you know, we're still partners. He's more or less retired, is retired, and has been for quite some time. But I've honored that promise to him, kept my word. I have never, ever, ever in 31 years missed a 2-week purchase, where every time I get paid, I buy something, whether it's $2 silver or whatever. I mean, every 2 weeks for 31 years, I've paid myself first, and that was my promise, and I've honored it. And it's an amazing way. It's the best gift he's ever given me, ever. You know, we started from nothing, my dad and I. My dad's middle name is Miles, and his best friend who loaned us money to start the company, his middle name was Franklin. We weren't wealthy when we started Miles Franklin. We were anything but. We were hoping on a wing and a prayer. My parents sold their life insurance policies on top of that. We threw everything at an opportunity, started in a 1-room office, and I never even graduated college. I was on my way to a double major in economics and communication when I just left after starting the company with my dad. And we are the most unlikely cast of characters to have ever succeeded, ever. And we did it the old school way, through hard work and honesty, and never having a customer complaint. But I will tell you, the greatest gift my dad's ever given me, ever, was that. Taught me how to save. And any of the guys that I hire at Miles Franklin, that's a prerequisite to me. My assistant, Justin, just graduated from the University of Minnesota School of Business. I told him I wouldn't hire him unless he did the same thing. Every 2 weeks, I don't care what it is, you buy something for yourself, because life is like a roll of toilet paper. And when you're young, you don't notice the passage of time. That roll stays big forever. But as you get older and the roll starts to get smaller and smaller, you witness the passage of time much quicker. And you're like, wow, how did that roll get so small? Now I'm running out of time. And if you haven't saved along the way, paid yourself first, it becomes exponentially harder to ever get ahead in life. And I think you have to pay yourself first or you never get ahead. And that's the greatest gift my dad's ever given me, and I will never forget it. And I will try to impart that wisdom upon
That's a big
anyone
deal.
out there.
When I couldn't make my financial situation work, it was because I wasn't paying myself first.
Well, that's just it. You know, there's a million things that you want to buy and you consume, and you look at your checkbook or your bank account. It's, you know, it's a problem. So if you pay yourself first, and when you're young, you don't think about the future, children, you know, a husband or a wife, or a child, college education, weddings, retirement. I mean, it goes on and on and on, and cost of living isn't getting any cheaper. So that was the promise I made my dad, and really the best thing that he ever did for me. In terms of our Canadian storage, yeah, so there's something called FATCA, FATCA Form 8938, and that is IRS reporting, where anything held outside the United States has to be reported. There is a loophole. I don't know if you call it a loophole. It's their own admission that precious metals directly held in a non-financial institution are not reportable. So the question is, what does directly held mean and a non-financial institution? Meaning, if you hold anything in a pooled account, it's reportable. It's not directly held. If you hold anything in a financial institution like a bank, it's reportable because it's not a non-financial institution. So our Brinks account is non-reportable because it is directly held, which means segregated 100% in your name, not pooled. We have it audited. We also have the only safe deposit box program in the entire Brinks Global Services Network, which I'll explain in a moment why I'll explain it. But Brinks is most certainly not a financial institution. And so our offshore program, now, if you hold stuff in the US, it's not reportable, but if you're outside the country, it is, unless it's directly held in a non-financial institution. So we, when we started the company, which was 10 years ago, our storage division, we asked the IRS, what do you mean by directly held? And we did this repetitively. Our attorney, I kept calling my attorney, like, what the hell? I mean, have they responded yet? No, send them another letter. Have they responded yet? No, send them another letter. So after about 8 months of this, they finally came back to us in typical IRS speak and said, we reserve the right to not answer that question at this point. So what we did was we really redundantly structured the program so that it is not only redundantly segregated in 3 or 4 different metrics, but we also have semi-annual third-party auditing by a third-party auditor who comes in the same group that audits the Royal Canadian Mint. They come in and they audit all of our accounts in Canada and present a certificate to the holders. But a year or two later, well, about 5 years ago, 6 years ago, the IRS came out with a report. And if you Google basic questions and answers form 8938, it'll take you right to the IRS website, where they came out and they said, because FATCA and FBAR, which goes to the Treasury, these are the 2 forms that you have to fill out if you have metal outside or any money outside the country, because they're so largely redundant in scope, we're going to clarify things for you. And in terms of metals, it said the exact same thing. Precious metals held outside the United States, if they are directly held in a non-financial institution, are not reportable. Example, they gave it an example, not the only example, but an example was metals held in a safe deposit box in a non-financial institution. So I immediately got on the phone. I called Brinks. I said, we've had a great relationship for a very long time. I will pay to build this program. I will put the safe deposit boxes in the vault in Toronto and Vancouver. I will pay for it all myself. You give us an exclusive. And they did. So we have the only safe deposit box program in the entire Brinks Global Services Network, where the boxes are held inside the vault in Toronto and in Vancouver. You hold the only key and the only spare. They're brand new 1 key state-of-the-art boxes, not the 2 keys where you put one in and the bank puts one in. It's 1 key. You hold the only key and the only spare. Your metal is put inside there. It is following the law to the letter, 100%. It is the only 100% fully compliant program, at least to the way the law reads.
Now,
In
if
the
you're
industry.
holding the
Now,
key, if you have possession of the key, you, how do they add to it? Because I understand you could dollar cost average in every month with Miles Franklin.
so you would have to send the key back
Okay.
to them. And if you can't get up there yourself,
Yep.
which you have the right to do, you send them the key where it is opened under camera.
Okay.
The metal is either added or subtracted, and you get a new laminated brink certificate that supersedes the previous,
Okay.
and they'll send it back to you. So they only do things under dual custody, 2 people, and under digital camera if they make that addition or subtraction, because you're not able to get up to the box.
Yep.
I would, as a caveat, argue that our other program that is not in the safe deposit box is fully compliant as well. Because the way that it is set up, it is so redundantly segregated that it would be impossible for any of us to access that product without going to prison. Literally, I mean, it would be so evidenced every step of the way. There's about 8 checkpoints along the way that would show who took it, where it went, where it was delivered to. One of the things we did to guarantee that is that the metal has to go back to our facility, our warehouse in the United States. So not only would we have to sign for it, forge the paperwork and say, this is what the person wanted, forge the signature, have it sent back and signed for by my warehouse staff, it's cut and dry, you're dead. There's no way that we could take it out of there and say, well, you know, Joe Smith said he wanted us to have it. No, it doesn't work that way. Right. So it is completely and redundantly segregated. And this is why I've chosen Brinks. They are a Fortune 100 company. They do not mess around. When I walk in to do, before COVID, I was in every single audit. And if you walk in there wearing a sweatshirt with pockets in it, because it's freezing in these vaults, they make you take it off while you're doing the audit. And when you leave, you can put it back on. They do everything, but literally do a cavity check when you walk out of there. You walk through metal detectors, the whole 9 yards, and they trust us, but they don't want to be responsible for even an ounce misappropriated or lost.
They built a 100+ year brand on that.
Yes, it is 100+ years. They've never even had an attempted burglary at any of the facilities.
Incredible.
So what you then have is money outside the country that legally nobody knows about. And it's interesting to note in Canada that the banks, the major banks, are obliged to take Canadian mint products at the lobby of their bank. So you could store gold maple leafs in one of these facilities, fly up to Toronto or drive through the border, pick up your metal, and then go into Royal Bank of Canada or Bank of Montreal or CIBC, any of them, and sell your metal right there in the lobby of the bank for cash. So it gives you options when others have none, whatever that event may be.
And I'm super bullish on Canada long term. I want to buy property there. Not now, but like I've saved in Canadian maples for that reason. Because at some point in time, I plan on bringing them into the bank and getting a loan for whatever piece of property up there that.
Well, next time we talk, I can tell you the story of going through the Montreal airport with 240 gold maple leafs, and the way that the United States and the Canadian government looks at that. I'll just give you a little teaser. They look at it as legal tender, not as $300,000 going across the border. So when you talk about gold maple leafs, every one that you have is $50 according to the Canadian border customs.
Because that's what's printed on it for the viewer.
Yes, that's correct. Now, if you were stupid enough, you could take that and walk into Tim Hortons in the lobby of the airport in Vancouver and use it to buy a coffee and a donut. Now, it wouldn't be the smartest thing you ever did, but it would be legal, as it is legal tender. It's not currency, but it's legal tender. And nonetheless, from a standpoint of going across the border back and forth, it's a wonderful way to do it.
It's incredible how it really is the real financial system, and it's clearly used by global elites at all levels. I mean, they've created these loopholes. I mean, the lawmakers themselves have created these loopholes so that they can move, real wealth around the globe, and the average guy is just kind of waking up to it.
Why do you think one trader on COMEX is long 4 million ounces of gold? One of the largest long concentrated long positions the COMEX has ever seen. $7.5 billion worth of gold. Why? The biggest money in the world realizes that we have reached the end of the line on fiat currency, that we've milked as much out of the system, just about, as is able to be done so. And it's I think they're quietly exiting stage left. You don't look at price because it's a tool of misdirection. Look at fundamentals and look at what the biggest money is doing. If I want to misdirect people, I do so with price. And if the biggest money in the world since 2017, starting with the central banks and repatriating their gold and going on a massive buying spree, if I hadn't seen the level of large money acquisition of gold and silver, I would be less inclined to be bullish. But I am convicted more than ever when I see the price being suppressed to irrational levels on COMEX. And at the same time, the commensurate amount or greater acquisition by the big money who's holding the price down. It's very obvious. They're holding the price down to acquire the metal for what comes next. It's not being held down by the laws of supply and demand. It's being held down because of the laws of supply and demand. And if you look at this industry, the demand is off the charts. It's unlike anything I've ever seen in 31 years. So it's a game that will end at one point with the banks allowing the price to run every bit as much as they've held it down.
Yep, and it will be an interesting ending too, because there'll probably be likely a lot of economic turmoil when the price does rip.
Yeah, well, and that's the old saying, be careful what you wish for.
Yes.
Because when that happens, it comes in the light of a dollar getting clubbed and everyone around you suffering. But that doesn't mean you shouldn't save the world one person at a time, starting with yourself. You know, it's a noble effort to try to help people. But when you try to help them and talk to them about the virtues of gold and silver, it's a very scary message you're giving them. And it's not typically what people want to talk about at a cocktail party, that the sky is falling. And I've learned that the hard way. I don't talk to the people I care about unless they bring it up to me, because I want to be invited back to the next cocktail party.
Yeah, that's good advice. Because
that guy's just a bummer. All he does is talk about the shit hitting the fan. I don't want to come back next time. I learned that a long time ago. So if they come to me, great. But
that's good advice. Yeah, my wife has told me that. Okay, when we're around family, just don't tell them that the fiat system is going to come to an end and it's going to be.
Right. Exactly.
Well, Andy, thank you so much for your time. I was taking notes at the beginning, but I'm like, I'm gonna have to rewatch this 3 or 4 different times because there's so much in this that I had no idea about that I'm going to be researching. I'll try to put in the notes for our viewers. And
awesome.
It was awesome having you on, and
I'd love to come back anytime, and if I can help any of your listeners out, we'll make sure they get the best price in the country. And you and I will have a lot to talk about offline, and give me a call anytime. I look forward to coming back. If anything happens that you need my opinion from this side of the table in terms of its relation to the precious metals market, I'm just a phone call away. Be happy to come back anytime.
Absolutely. I'm definitely going to have you back on, and I'll be up in Daytona at some point to see you. So
sounds good, buddy.
All right, Andy, thank you very much for your time.
All the best. Thanks, Travis.
I'm very interested in this space as we move forward throughout this decade, because I just don't think many other things are going to outperform it. Looking at this period of history from 2022 to 2032, and we look back at this period of history 10 years from now, what will be the place to have been? If we look back from 2022 to 2012, where was the space? It was clearly in cryptocurrencies, mainly Bitcoin or Tesla. If you really wanted to, go like looking back at it. Now, moving forward, is that going to continue? Is that trend going to continue for another 10 years? I don't think so. Where might that love shift to? Where might that capital shift to? When people can't get a positive interest rates in bonds, meaning inflation is 7%, you're getting 4% on your bond, you're getting a negative 3% rate. Where do you go when you just want a 0% rate, but you want to be able to maintain your purchasing power? I think that they rush into precious metals. So let me know what you guys think in the comments below. And as always, until next video, I'll see you down there in the comments. Peace.